Welcome back to Investing Talk Podcast. Today we're taking a deep dive into a company that's seen some, well, truly extraordinary ups and downs, Maase. We're going to unpack its wild financial ride, its place in the competitive Chinese fintech landscape, and some pretty unexpected factors that recently sent its stock tumbling. Our mission today is to sift through the data, give you a clear, concise understanding of what's really going on with Maase so you can walk away well-informed. And hey, if you're enjoying these deep dives, please take a moment to subscribe, like, and comment. It really helps us bring you more content like this. And if you're feeling generous, maybe consider buying us a coffee every little bit. Helps keep these conversations going.
Okay, so let's kick things off. Who exactly is MAAS?
Right. Maase is a diversified financial services provider. They're based in Chengdu, China. Founded back in 2010, they operate primarily within asset management and custody banking. But their business model really centers on financial technology services. Think insurance agency work, claims adjusting, and wealth management. So pretty broad. Okay, broad fintech in China. Now, I noticed something interesting when we were prepping the company rebranded recently. It used to be called Highest Performances Holdings. What's the significance there? What might a name change like that tell us?
That's a really sharp observation. A name change, especially from something like Highest Performances Holdings, can signal a few things. Often, it reflects a strategic pivot. Maybe they're changing their business model, focusing on something new. But sometimes it can also be, well, an attempt to distance the company from past performance issues, or maybe even hint at some instability. It definitely makes you want to look closer, you know?
And speaking of looking closer, it's a microcap company, right? Market cap around, what, $38.6 million as of June. For our listeners, what does microcap immediately bring to mind? What are the unique risks, maybe opportunities there?
Correct. Microcap status is key here. When you hear microcap, you should immediately think about increased illiquidity and volatility. Illiquidity means it might be harder to buy or sell shares quickly without affecting the price. Fewer buyers and sellers, basically. And volatility. That means the price can swing pretty wildly. Now, that can mean potential for big gains if things go right, but it also means significantly higher risk compared to larger companies. It's crucial for investors to understand that risk tolerance is key here.
Okay, so a microcap with a recent rebranding. Now let's get into the financials because this is where the Maase story gets, well, fascinating. We saw this incredible revenue growth, but then a really sharp reversal. Can you walk us through that?
Certainly. It is quite dramatic. The company reported an extraordinary 2024 revenue, $1.19 billion. That was up over 935% from their 2023 revenue, which is about $114.4 million. I mean, that's explosive growth by any standard.
Wow, 935%. That sounds like an investor's dream. But then what happened?
Exactly. But then you look at the latest trailing 12 months figure. It stands at $255.58 million. That suggests a very sharp decline right after that huge spike. It points to significant volatility. Or maybe, one-off events that massively boosted revenue in 2024 but weren't sustainable. That upward trend definitely reversed hard.
A big spike and a big drop. So what about profitability? Are they actually making money from all this activity?
That's where the picture gets less rosy. The company reported a net loss of $3.44 million for the latest trailing 12 months. Earnings per share came in at -$0.94, which means, practically speaking, its price-to-earnings ratio isn't applicable. You can't calculate it because there are no positive earnings, so you can't directly compare it to profitable peers using that specific metric.
Okay, so losses currently. How does this financial picture, the volatile revenue, the losses, compare to other typical Chinese fintech companies?
Well, when you benchmark MAAS against its peers in Chinese fintech, that revenue growth really stands out as exceptionally volatile. Most peers tend to show steadier expansion, maybe not that explosive 900%, but more consistent year-over-year growth. And profitability metrics, as we said, lag the sector norms. Many leading players do maintain positive earnings. Plus, MAAS doesn't pay a dividend, unlike some of the more mature competitors in the space. That's another difference.
And given these dramatic numbers and its microcap status, are there any sort of data gaps, things that you as an analyst would normally want to see but aren't readily available here?
Yes, absolutely. That's a really important point, especially with microcaps. Some key financial details aren't easily found in the initial reports. Things like precise debt-to-equity ratios, how much debt are they carrying relative to their equity. Detailed free cash flow trends over several years, that's missing too. That shows how much cash the business actually generates. Return on equity figures aren't clear either. This limited transparency is definitely something potential investors need to be mindful of. Makes proper due diligence harder.
Right. So we have this picture. Explosive but volatile growth, current losses, some data gaps. Where does Maase actually fit in the competitive landscape of Chinese fintech? What are its strengths, and what are the big red flags?
Okay. Competitively, Maase seems to operate more as a challenger, not really an established leader. There's no explicit mention of, say, proprietary technology or significant brand leadership in the information we have. That suggests maybe a limited defensible mode against bigger competitors.
Limited defensible position. What does that practically mean for a company like Maase trying to compete? Is it always fighting uphill?
It often is, yes. Without unique tech or a strong brand, it's harder to stand out. Larger players can potentially outspend them or leverage existing customer bases. It can mean pressure on margins. However, on the positive side, Maase does have diversified services, insurance agency, claims adjusting, wealth management that provides multiple potential revenue streams. Their digital distribution channels could also be a strength, especially if demand for online financial products picks up again after some of the regulatory dust settles. And that niche in claims adjusting might be less crowded than other areas, so diversification offers some potential resilience.
Okay, so diversification is a plus. But let's circle back to the red flags. What else really stands out as a major concern?
Definitely. Beyond the microcap status and the volatility we've discussed, the whole operating environment in China for fintech is still challenging. There's ongoing regulatory scrutiny. We saw major crackdowns starting in the late 2020s, and that uncertainty persists. Policies can change quickly. And as we mentioned, that limited public disclosure compared to larger listed companies makes it really tough for investors to gauge the true operational health. That lack of transparency is a red flag in itself.
And how does it really stack up against some of the bigger, maybe more familiar names like Noah Holdings or Pui? Are they even comparable?
It's difficult to compare them directly, honestly. MAAS operates on a much smaller scale. It has far less brand recognition, particularly internationally, compared to players like Noah or Pui. While they're all in the Chinese wealth management space, broadly speaking, Noah is known more for innovation and digitalization. Pui has been very aggressive in digital client acquisition. MAAS seems to be lagging behind these larger players in terms of market share and likely investment in tech and outreach. So different leagues, really.
Okay, now here's where the story takes a really sharp turn. June 2025. Maase's stock just plummeted. What triggered that dramatic drop?
Yes, that was quite something. The stock fell over 52% pre-market on June 24th. This followed a major announcement about a structural change. Maase said it would end trading of its American depository shares, the ADSs, and instead list its Class A ordinary shares directly on Nasdaq. That kind of change often creates near-term uncertainty.
Ending ADS trading for a direct listing, can you quickly explain what ADS are and why would a company make that switch? Does it signal anything? And wasn't there a reverse split involved too?
Good questions. So ADSs, American Depository Shares, are basically certificates that let U.S. investors trade shares of foreign companies easily on U.S. exchanges. Deciding to ditch ADSs for a direct listing of ordinary shares can be about simplifying the company's structure, maybe cutting some administrative costs. Sometimes it's needed to meet listing rules. It can streamline things. And yes, you're right, this move for Maase involved a 1-for-90 reverse stock split. A reverse split consolidates shares to boost the price per share. Companies often do this to stay above the minimum price required by the exchange, like Nasdaq. But it's important to note, while technically it helps compliance, the market often sees reverse splits cautiously. Sometimes they're viewed as a sign of distress, a struggle to stay lifted, rather than a sign of healthy growth.
So a big structural change, a reverse split, maybe not the best optics, but I understand there was another factor, something really unusual that contributed to the sell-off.
Yes, indeed. A major and quite unusual factor was heightened sensitivity around external geopolitical issues. Maase had made public comments criticizing President Trump's involvement regarding Israel-Iran tensions. This drew significant attention, a lot of controversy, and essentially turned the company into a kind of focal point for political risk within its sector, which is not something you typically see impacting a stock price so directly.
Hold on. A company's public statement on international politics hitting its stock price that hard, that's quite a curveball. What's the bigger takeaway there for investors? Is this a new kind of risk emerging?
I think it is, yes. Especially for digital global companies. The lines are blurring. It shows that for companies operating internationally, public stances on sensitive geopolitical issues can carry real financial consequences. It's a form of reputational risk, definitely. Investor confidence can be hit hard. Customers might react negatively. This particular statement added a layer of uncertainty and risk that went well beyond their financial reports.
Wow. So the plunge was this mix, a big structural change, plus this very public, controversial geopolitical commentary. What was the immediate reaction in the market? What were analysts saying? Social media.
The immediate sentiment was cautious to negative,
Mm.
understandably, given the size of the drop and all the uncertainty. Analysts seemed wary. On social media, you saw a lot of discussion about the stock plunge itself, of course. Lots of speculation about why management made the structural changes. Was it hiding something? And naturally, a lot of talk about the company's sudden exposure to Middle Eastern geopolitical risk and what that meant. It was a very noisy event.
So bringing this all together, the financials, the competitive position, this dramatic plunge, what's the outlook for Maase? What should someone watching this company be focused on?
Well, looking ahead, the risks are pretty significant. You can't ignore them. That ongoing uncertainty around Chinese government policy towards fintech is a major overhang. It creates downside risk. The stock's thin liquidity, being a microcap, makes it more vulnerable during market stress. Big swings are more likely. And that association with controversial geopolitical events, that's an ongoing reputational risk. Could affect partnerships, customers, investor appetite.
Those are definitely serious headwinds. Are there any potential bright spots, any catalysts that could realistically turn things around?
There are always possibilities, though, maybe distant ones here. A major potential catalyst would be a general stabilization, or even better, an easing of regulatory pressures in China on the fintech sector. That would lift many boats, including potentially Maase's. On a company level, perhaps successful new product launches using their digital platforms could drive some growth, especially if they execute well after the rebranding. But these are big ifs, relying either on external factors or strong execution in a difficult environment.
Okay, so considering everything, the volatility, the regulatory risks, the geopolitical angle, the microcap status, but also the diversification. What's the overall take? What's the recommendation here?
Based on everything we know right now, the general recommendation leans towards hold. While that diversified model offers some resilience, the combination of persistent regulatory headwinds, the risks inherent in being a microcap, and its relatively modest competitive position just argues for caution. The volatility is high.
And for our listener, if they are holding or just keeping an eye on Maase, what specific things should they be watching most closely?
Anyone tracking Maase should definitely watch the upcoming earnings releases very closely. Look for any sign of stabilization in revenue, or better yet, any progress towards profitability. However, it's really critical to remember that any significant, sustained upside for Maase likely depends more on broader improvements in the Chinese policy environment for fintech. The macro picture is probably going to be more important than company-specific news in the near term.
What a story. From that incredible growth spike to big losses, navigating massive regulatory shifts, and even getting tangled in geopolitical commentary that tanks the stock. It's just a powerful reminder, isn't it? How many different, sometimes unexpected factors can shape a company's path in today's market. And this whole discussion brings up a really interesting question for you to think about. When you're assessing a company, how much weight do you give to the pure financials versus these external factors, like management's public statements on global politics? Definitely something to ponder for your own investment strategy. Thank you so much for joining us on this deep dive into Maase's complex journey. We hope you found it informative. We'll be back soon with another fascinating topic for you to explore.